Ever feel like you're just trying to drink from a fire hose of information?
Oh, definitely.
Headlines blare one thing, then another contradicts it, and you just want to cut through the chaos and understand what's really important.
Yeah, get to the core of it.
That's precisely what we're doing here with this deep dive. We've sifted through a fascinating stack of material think pieces, historical analyses, economic data
A really interesting mix.
to bring you the core insights.
Absolutely. You've curated a compelling set of sources,
No.
and our focus today is on, well, the enduring relationship between war, how we govern ourselves, and the often surprising economic consequences that follow.
Right.
We'll be looking at reflections on past U.S. presidents who were also generals, historical echoes in current events, like you said, and what the economic tea leaves might be telling us.
Exactly. So, our mission, specifically for you listening, is to distill the crucial knowledge from all this stuff.
Mm-hmm.
We're aiming for those key lessons and unexpected connections that can give you a real understanding of these interconnected forces. It's about getting you well-informed efficiently, making sense of the bigger picture without getting bogged down in endless details. Let's dive in.
Let's do it.
Okay, so the material we're looking at opens with a series of quotes that really make you stop and think.
They really do set a tone.
You've got King Solomon's observation that there's nothing new under the sun, Douglas Adams's slightly cynical take on our tendency not to learn,
The Babelfish problem.
and Aldous Huxley's even bleaker thought that the great lesson of history is that nobody ever learns the lessons of history. It's a rather sobering way to begin, isn't it?
It is. And it immediately brings to mind the work of Barbara Tuchman, whose ideas really resonate throughout these sources. She argued that governments often find themselves facing choices that are either disastrous or, well, simply unpalatable.
Right? No easy answers.
No. And when a threat emerges, the instinct is often to react forcefully to smash it, rather than to truly understand its roots.
And she introduces this powerful idea of wooden-huttedness, this almost willful blindness to reality when it clashes with established beliefs.
Exactly.
The example she uses of Philip II of Spain, who just couldn't let go of his failing policies, it really illustrates how this can play out on the world stage.
Just a classic case study.
And that quote, "No, my son, with how little wisdom the world is governed, it's almost darkly humorous, but also makes you wonder about the constant challenges of leadership." What's the surprising takeaway there? Maybe it's just how persistent human fallibility is, regardless of the era.
Precisely. It suggests a fundamental human element in governance, a capacity for error that doesn't seem to disappear with time. And when we consider how history itself is recorded and interpreted, well, Dan Brown's point about victors writing the history books,
Yeah.
and Marx's famous line about history repeating first as tragedy, then as farce, they both highlight how our understanding of the past can be shaped by a particular perspective, often that of those in power.
Then you have Eric Hoffer's thought that the best and worst among us tend to dominate the game of history, often at the expense of everyone else. That feels particularly relevant when you look at current global conflicts.
It does.
And Mark Twain's utter cynicism, not even thinking it's possible to prevent history from repeating itself, it's a pretty pessimistic view of human nature, isn't it?
It is, but there are counterpoints. Lawrence J. Peters suggests that the pain of not learning from experience is the greatest pain, implying that the potential for learning, however difficult, still exists.
Okay, so a glimmer of hope there.
Maybe. And Vonnegut's idea that history is just one damn thing after another, a list of surprises, while perhaps a bit resigned, it at least acknowledges the inherent unpredictability of events.
Right.
Then you have a completely different perspective with General Patton, who seemed to have a genuine, if perhaps controversial, appreciation for the intensity of battle. So while there's a lot of cynicism, there are also hints of resilience and different ways of viewing conflict.
Which brings us to this anecdote about Chou Enlai and Aristotle Onassis. Our source notes, it might be apocryphal, but it's a great illustration nonetheless.
It really is.
The idea that seemingly disparate events could be connected in unexpected ways really highlights how different people interpret history and, as Voltaire put it, how history can feel like a collection of the crimes, follies, and misfortunes of mankind.
Yeah.
What's fascinating here is how easily narratives can be shaped and how perception plays such a big role.
Exactly. It underscores the subjective nature of historical interpretation and the often absurd twists and turns that events can take. And this leads us to Charles Mackay's study of extraordinary popular delusions and the madness of crowds.
Ah, yes.
And Bernard Baruch's lament about mass behavior, quoting Schiller on individuals being sensible but crowds becoming irrational, like blockheads.
Right. That point about crowd psychology becomes particularly interesting when we later consider the impact of things like universal suffrage on governance.
It does. The idea that individual rationality doesn't always scale up to collective wisdom makes you think about the forces that shape societies.
And then the author shifts to the present day, referencing Tuxman's The March of Folly in the context of the battle for Bakhmut in Ukraine, noting its reported fall.
A very stark modern parallel.
It's a reminder that these historical patterns might still be playing out right now.
It is. And Alexander Stubbs' exchange with Sergei Lavrov, where Stubb pleads to stop this madness, and Lavrov just shifts the blame to the West. It really encapsulates the opposing narratives surrounding the Ukraine war.
Totally different realities.
And the different perspectives on the so-called liberal world order. It highlights the deep divisions that persist.
Okay, so that gives us this broad, almost philosophical overview of war and governance. Now we move into part two, which draws a very direct parallel between the situation we saw in Bakhmut and the Battle of the Somme during World War I.
A really chilling comparison.
We even have a map here, figure 2, showing the Western Front. Can you paint a picture of what led to that devastating conflict?
Certainly. World War I erupted in 1914 following the assassination in Sarajevo. This triggered a chain reaction of alliance commitments, drawing in the major European powers.
Dominoes falling.
Exactly. Germany and Austria-Hungary on one side, and France, Britain, Russia, and eventually Italy on the other, with the Ottoman Empire joining the Central Powers later. The overwhelming historical consensus, and our sources emphasize this, is that it was a largely unnecessary war,
Unnecessary.
a tragedy that might have been averted through more effective diplomacy. The human cost was truly horrific. Approximately 9 million soldiers and 5 million civilians perished.
Just staggering numbers, and it's almost hard to imagine now, but initially there was this widespread enthusiasm for the war, particularly in Britain.
Incredible, wasn't
The
it?
formation of Kitchener's Army, these entirely volunteer units, and the PALS battalions where men enlisted with their friends and colleagues, it really shows a different mindset.
Yeah, like going off on an adventure, almost.
We even have specific examples like the Stockbrokers Battalion in London and various Liverpool battalions, with thousands signing up in days. Lord Derby's quote about a battalion of pals fighting shoulder to shoulder really captures that initial fervor.
It does.
What's surprising is how quickly that enthusiasm seemed to fade.
It did. By early 1916, the grim realities of the disastrous campaigns like Gallipoli and the ongoing slaughter in the trenches of the Western Front began to filter back home.
The letters, the casualty lists.
Exactly. The stream of volunteers dried up, and Britain, like its continental counterparts, was forced to introduce conscription.
And then comes the Battle of the Somme, which raged from July to November 1916. The objective was to break the stalemate, right? To finally achieve a breakthrough and hasten an Allied victory.
That was the plan.
But the sheer scale of it is almost incomprehensible, over 3 million men involved and around 1 million casualties.
1 million.
And the first day for the British Army was just catastrophic, wasn't it? Nearly 57,500 casualties, including over 19,000 killed in one day.
Unbelievable losses. Eisenhower's later reflection, "I hate war as only a soldier who has lived it can," really brings home the brutal reality of such conflicts.
Yeah. What's a key takeaway here? Perhaps just the sheer human cost that often gets lost in the grand strategic narratives.
I think so. The battle also marked the early and often unsuccessful deployment of new military technologies like aircraft and tanks.
Right. Trying new things in the worst possible laboratory.
But tragically, as Tuckman highlighted with Philip II's stubbornness, there seemed to be a similar inflexibility within the British High Command. General Henry Rawlinson, the British commander, expressed absolute confidence in the upcoming offensive,
Uh-oh.
even though there were clear doubts about whether the preliminary artillery bombardment had actually neutralized the German defenses.
That wooden-headedness again. And the results of that overconfidence were devastating.
Completely. The German defenders were experienced, their machine guns were strategically placed, the defensive positions were formidable,
And the artillery barrage.
largely failed to achieve its objective. The near-total loss of the Newfoundland Regiment on that first day is just a heartbreaking example of the carnage.
Just wiped out.
David Fromm offers a thought-provoking, though perhaps controversial, perspective on the Somme's legacy. He acknowledges the horrific machine gun fire, the sheer scale of the slaughter, and the enduring image of incompetent officers.
The lions led by donkeys idea.
Exactly, that perception. However, He also points out that German casualties were potentially even higher and argues that the tactical and strategic challenges faced by the British were genuinely unprecedented and difficult.
So, not just incompetence.
He suggests it's a more complex picture, that the problems were too new and too hard, a point that maybe hasn't fully resonated with popular understanding.
Interesting nuance, and the source briefly mentions the Third Battle of Ypres, Passchendaele.
Another horror show.
Another truly dreadful campaign, with enormous casualties on both sides, which even the British Prime Minister, Lloyd George, strongly condemned as a great disaster. It really paints a bleak picture of the Western Front.
Relentless attrition.
We also get a note about the U.S. entering the war in April 1917 and beginning to play a significant combat role by the summer of 1918 under General John J. Perkins.
And it's crucial to consider the German perspective on Passchendaele. Their own general staff concluded that the battle had pushed Germany near to certain destruction, highlighting the immense strain that years of attrition warfare had placed on all the belligerent nations.
Everyone was bleeding dry. Then we have this incredibly powerful passage from F. Scott Fitzgerald's Tender is the Night, where he describes the Somme.
Oh, that's haunting.
He talks about the slow, almost dreamlike advance of the British soldiers into withering fire, the staggering loss of life, and his sense that no Europeans will ever do that again in this generation. He calls it a love battle.
A love battle, yeah.
The tragic culmination of a century of middle-class values being annihilated. What strikes you about that?
It's just deeply poignant, isn't it? Capturing the almost unimaginable scale of the sacrifice and the underlying societal factors that allowed such a devastating conflict to unfold. It makes you reflect on how deeply ingrained beliefs can lead to immense tragedy. It's also worth noting, though, that while the Somme's casualties were immense, the Battle of Stalingrad in World War II actually saw even greater losses.
Right, perspective. Going back to the German side, the source highlights General von Falkenhayn, the German chief of staff,
An interesting figure.
who surprisingly recognized quite early in the war in 1914 that Germany couldn't achieve a decisive military victory and actually advocated for a negotiated peace.
Really early on.
Yeah, but his strained relationship with Chancellor von Bethmann-Hollweg hindered these efforts, and he was eventually removed from his position.
Politics interfering.
It's fascinating that even Winston Churchill considered him to be the most capable of the German generals, and he's even credited with preventing excessive brutality against Jewish people in Palestine during his later command.
That's quite a contrast.
Falkenhayn himself later viewed Germany's declarations of war as justifiable but overly hasty and unnecessary. So, real divergence of opinion, even at the top.
It really underscores that even within the highest military and political circles, there were dissenting voices and an early recognition of the war's potential for disaster.
But they didn't prevail.
No. As our source points out, both the German and British high commands, personified by figures like Haig and Rawlinson, continued to pursue offensive strategies despite the appalling casualties and the evident demoralization of their troops.
Just kept sending them over the top.
The Goethe quote, "There is nothing worse than aggressive stupidity," seems particularly fitting here. It's a key insight. Perhaps the difficulty leaders face in admitting mistakes and changing course once a major conflict has begun.
Inertia is powerful.
Extremely.
Finally, in this part, we see the decisive impact of the arrival of approximately 2 million fresh U.S. soldiers by the summer of 1918.
The Yanks arriving.
This significantly shifted the military balance on the Western Front, leading to the successful 100 Days Offensive and the eventual armistice in November 1918. So, a truly horrific conflict, with lessons that, unfortunately, seem to have a way of repeating themselves in different forms.
History doesn't repeat, but it rhymes, as they say.
Indeed. Now, Part 3 pivots to the economic consequences of war, looking both at the aftermath of World War I and drawing parallels to the potential economic impact of the ongoing conflict in Ukraine.
Yeah, the financial fallout.
The author makes the point that just as WWI dragged on despite possible earlier exits, the Ukraine war could also have a protracted and economically draining effect. And we have several figures here, charts related to the WWI period that help illustrate this.
Precisely. The initial reaction of the U.S. stock market between 1914 and 1916 was, surprisingly, a sharp rise.
That seems odd, doesn't it?
War starting, market goes up?
Well, the prevailing interpretation is that investors believed the European war would be good for American business, particularly through increased exports.
Okay. Selling stuff to Europe. Exactly. We also see a significant surge in commodity prices during this period, which led to negative real interest rates. It's important to remember that the U.S. initially declared neutrality, and President Wilson made several attempts to mediate a peaceful resolution.
But even before the U.S. officially entered the war in April 1917, the stock market began to decline.
That's right, the optimism started to fade.
And that downward trend accelerated quite sharply after the declaration of war. There was a recovery towards the end of the war, but then significant falls in 1920 and 1921.
A real whipsaw effect.
By the low point in 1921, the Dow Jones Industrial Average was actually lower than it had been in 1906, a full 15 years earlier.
15 years. Wiped out all those gains and more.
That's a really stark illustration of the long-term economic disruption caused by a major war. What's surprising is the delayed and drawn-out nature of the economic consequences.
It is, and the performance of the Dow Jones Transportation Average, which back then was largely made up of railroad companies, is also very telling.
What happened there?
It actually peaked even earlier in 1906, and then trended downwards throughout the war. It underperformed the DJIA during the Roaring '20s before experiencing a massive collapse after 1929.
So a leading indicator of trouble, perhaps.
Could be. The author specifically directs our attention to Figure 14 as a reminder that markets can remain elevated for extended periods before experiencing sudden and severe downturns, drawing parallels to the crashes of 2000, 2003, and 2007, 2009.
Right. This time is different traps. So it's a cautionary tale about prolonged periods of market exuberance.
Definitely. The performance of European markets during this time was also quite varied. Unsurprisingly, the countries that ended up on the winning side generally saw better economic outcomes than those who were defeated.
Makes sense.
Germany, burdened by the harsh terms of the Versailles Treaty, was a particularly poor economic performer. But what's interesting is that even Great Britain, the major European victor,
You'd expect them to do well.
you would, but they experienced relatively weak stock market performance in the 1920s and a long-term decline in the value of the British pound. This suggests that even victory in a major war can come at a significant and lasting economic cost.
So winning isn't always winning, economically.
It really highlights the complex and often unpredictable economic repercussions of large-scale conflicts, even for the apparent winners.
Yeah.
The United States, on the other hand, seems to have been the primary beneficiary of World War I, at least in relative terms.
How so?
Their human losses were significantly lower than those of the major European powers, and, as Ira Krakow points out, the outbreak of the war coincided with the end of a U.S. recession,
Good timing for them.
leading to a rapid increase in exports to the warring nations and a surge in loans to the Allied countries. This fueled a significant boom in American industrial production and GNP between 1914 and 1917. So the U.S. economy was uniquely positioned.
And we have this powerful quote from the civil rights activist Asa Philip Randolph. Make wars unprofitable and you make them impossible.
A profound statement. Gets right to the economic incentives.
The source also details how the U.S. steel industry, specifically Bethlehem Steel, which had been facing difficulties before the war, experienced an enormous surge in demand for armaments, becoming a crucial supplier for the Allies and seeing its profits and its ranking among U.S. manufacturers skyrocket.
Wow.
This illustrates how certain industries can thrive during wartime, even amidst widespread economic disruption.
It vividly illustrates how war can generate immense wealth for specific sectors and individuals, even while causing widespread destruction and human suffering. The somewhat shadowy figures of the arms dealers Sir Basil Zaharoff and the notorious spy Sidney George Riley serve as compelling examples of those who managed to prosper in the chaotic environment of global conflict.
The profiteers.
Exactly.
The author concludes this section by emphasizing the uncertainty surrounding whether there will be a clear economic winner in the Russia-Ukraine war, and the substantial risk of a prolonged conflict having a significant negative impact on global financial markets, echoing the lessons learned from the economic aftermath of World War I.
The parallels are definitely there to consider.
Okay, part 4 shifts our focus to navigating what the author calls the financial trench war of our current times.
A good metaphor.
We see a notable divergence in the performance of the U.S. stock market in Figure 17, where the S&P 500 and the NASDAQ are up significantly year-to-date, while the Russell 2000, which represents smaller companies, is essentially flat. What does this tell us about the underlying economic landscape?
This divergence is quite significant. The Russell 2000 is often considered a more accurate barometer of the overall health of the U.S. economy and the financial well-being of typical American households.
Main Street versus Wall Street.
Kind of, yeah. It's more representative of domestic-focused businesses. Its stagnant performance suggests that the broader economy and smaller enterprises are not sharing in the gains seen in the larger, more tech-heavy indices.
So a two-tiered market.
It looks that way. The author notes the expectation of a potential breakout from the Russell 2000's current range, but the direction of that move remains uncertain. So we have a divided picture of economic health.
Right. The big question is which way that breakout will go, up or down. The author points to a generally weak global economic outlook, and the U.S. leading economic index, shown in Figure 18, is flashing a warning sign of a potential recession.
Yeah, the LEI has been pointing down for a while now.
We even have a forecast from the Conference Board predicting an economic contraction in the second quarter and a mild recession by the middle of 2023. That certainly paints a somewhat gloomy picture.
It does. However, Wolf Richter offers a contrasting perspective, observing what he terms astoundingly loose financial conditions despite the Federal Reserve's recent interest rate hikes and the turmoil in the banking sector.
Loose, even with rate hikes. How?
He attributes this to the massive amounts of money that were injected into the financial system through years of quantitative easing and pandemic-related stimulus. All that liquidity is still sloshing around,
Right.
and it's proving difficult to fully unwind. The strong performance of certain large technology stocks, highlighted in Figure 19, seems to support this idea of abundant liquidity still finding a home in certain parts of the economy.
So the money's still there, just concentrated.
Seems like it. And Kevin Duffy provides an interesting insight into the Fed's quantitative tightening efforts, explaining that while the Fed's overall balance sheet is indeed shrinking, their various bank lending facilities have actually been expanding.
Ah, the alphabet soup of facilities.
Exactly. This effectively provides a form of subsidy to the banking sector, which could potentially keep inflation elevated for longer than anticipated. So it's a more nuanced picture than just the Fed slamming on the brakes.
Okay, so tightening in one area but loosening, or at least supporting, in another?
Exactly. We could be seeing a situation with tight liquidity in specific areas, like regional banks and commercial real estate, while other sectors, particularly those big tech companies, continue to benefit from ample available capital, as suggested by Figure 21.
So selective drought, selective flood.
That's a good way to put it.
Yeah.
The remarkable resurgence of a handful of these tech giants to levels seen during previous bubble periods is noteworthy, and the author suggests that many of today's investors may not have experienced the dot-com crash, perhaps leading to a different assessment of risk.
Short memories, maybe? What's a surprising element here? Perhaps just how unevenly that liquidity is spread around.
I think that's key. It's not a uniform picture. Interestingly, the source highlights the unexpected resilience of emerging market currencies and bonds in the face of U.S. Federal Reserve rate hikes.
Oh, you'd expect them to get hammered.
That was the expectation.
Yeah.
A Reuters report suggests that emerging economies have largely avoided the banking sector stresses seen in the U.S. because their banks didn't overinvest in long-dated, low-yielding assets like some U.S. banks did.
They didn't reach for yield in the same way.
Apparently not. The IMF even estimates zero mark-to-market losses for the median emerging market bank compared to potentially significant losses for their U.S. counterparts.
Wow. So why have emerging markets held up better?
Several factors appear to be at play. On average, emerging market government debt as a percentage of GDP is lower, and is primarily funded domestically, as shown in Figure 22. Less reliance on foreign capital.
Okay.
Additionally, as a collective group, emerging markets are currently running a current account surplus, meaning they're exporting more than they import, unlike the G7 nations, which have a deficit.
Stronger fundamentals, then.
Seems so. The author also mentions personally holding investments in emerging market banks, so stronger fundamentals seem to be providing a buffer.
And this leads to a discussion about the relatively low valuations of emerging stock markets, particularly in Latin America.
Still looking cheap compared to the U.S., which are seen as potentially attractive investment opportunities. The possibility of these markets outperforming if the conflict in Ukraine remains protracted is also raised.
Right, a potential rotation.
We even have a tweet from Tavi Costa emphasizing the attractiveness of Brazil and the strong year-to-date performance of the Mexican Stock Exchange Index.
Yes, there's a clear suggestion that there might be significant value to be found in certain emerging markets. Conversely, the worst-performing Asian stock markets in 2023, Hong Kong, Singapore, Malaysia, and Thailand are also mentioned,
Contrasting fortunes.
with the author suggesting that there could be good long-term value in these markets as well, despite the recent underperformance, as indicated by Figures 24 and 25. So it's not all one story in emerging markets either.
Right, need to be selective.
Yeah.
Finally, in this section, we touch on precious metals, which have entered a correction phase coinciding with a recent rebound in the U.S. dollar.
Gold pulled back a bit. However, the longer-term outlook for gold and other precious metals remains positive, driven by factors like the potential for dollar depreciation, their role as a safe haven asset, and their historical performance during times of crisis, as illustrated in Figure 26.
The long-term case still holds, the argument goes.
There's also a note that silver and platinum might potentially outperform gold in a scenario of stronger economic growth.
More industrial demand there.
And before we move on, we have a rather pointed quote from Tolstoy about governments using armies to dominate their own working classes and war primarily benefiting the wealthy elite.
A very stark and cynical view from Tolstoy.
Sets a certain tone for the next section. Part 5 delves into Patrick McKim's essay titled Wars Are U.S. 5 Former U.S. General Presidents' Perspectives on War and America's Standing in the World.
A provocative title.
It begins with a quote from Professor Hans Morgenthau about the inevitable clash between ideas and facts, a theme that seems central to McKim's argument.
It does. And Governor Kristi Noem's observation about nations that are critical of America increasingly moving away from the U.S. dollar sets the stage for a critical examination of America's current role in the world.
Yeah, the dollar's dominance being questioned.
McKim's central thesis is that the United States was once respected for its restraint and its adherence to principles of fairness, generally avoiding wars of choice.
The shining city on a hill idea.
Something like that. But he argues it has now evolved into a spendthrift, warlike country. What's the core concern here? It seems to be a shift in America's global image and influence.
He strongly emphasizes the importance of learning from history, particularly from what he considers to be the 5 wisest and most experienced Americans when it comes to both winning wars and fostering prosperity.
The general presidents.
Right. George Washington, Andrew Jackson, Zachary Taylor, Ulysses S. Grant, and Dwight D. Eisenhower. The aim here is to understand their apparent reluctance to engage in war and their strong focus on building prosperity at home,
With implications for today.
especially regarding issues like inflation and the U.S. dollar's status as the world's reserve currency.
McKim doesn't hold back in his criticism of current American foreign policy, describing the Ukraine war as a racket,
Strong language.
echoing the famous sentiment of General Smedley Butler and his experiences as essentially a high-class muscle man for big business. He highlights what he sees as an aggressive push by American elites in media, Hollywood, academia, politics, and the military-industrial complex to escalate international conflicts,
The establishment view, he argues.
with a perceived disregard for the dangers of uncontrolled escalation, especially with a nuclear-armed adversary.
Interestingly, he contrasts this strong elite support for the proxy war in Ukraine with recent polling data suggesting that less than half of Americans actually support it.
A disconnect between the elites and the public.
That's what he implies, suggesting that the general public is becoming more aware of the potential downsides and costs. He refers to an engaged citizenry as the Achilles heel of the war state and lists a series of past American military interventions that he views as failures: Vietnam, Beirut, Somalia, Iraq, Syria, Yemen, Libya, Afghanistan.
Long list.
Quoting Einstein's definition of insanity, doing the same thing over and over and expecting different results, McKim seems to see a pattern of ineffective military intervention.
He then introduces these 5 general presidents as a more grounded elite, individuals with extensive combat experience who deeply understood the hardships of war,
They'd seen it firsthand.
and who ultimately led the country through major conflicts to periods of lasting peace. He emphasizes their combined 37 years of combat experience, more than all other 41 U.S. presidents combined,
Wow, that's a statistic.
as well as their physical and moral courage, their strategic thinking, and the fact that they largely served 2 terms in office, except Taylor, and crucially, did not initiate wars.
Didn't start wars, that's key.
This stands in stark contrast, he argues, to many 21st century presidents, excluding Trump, who have launched or prolonged wars despite lacking significant operational military experience. What's the core difference he's highlighting? Perhaps it's that practical, lived understanding of war that these general presidents possessed.
McKim highlights powerful anti-war sentiments from both Grant and Eisenhower. Grant famously stated that he always found a way to avoid drawing the sword.
Let us have peace.
And Eisenhower strongly cautioned against preventative war, famously saying, "War settles nothing." Admiral James Stockdale's concept of personal honor is mentioned in the context of these leaders' deep sense of responsibility for both their soldiers and the wider citizenry.
A sense of duty.
He argues that they were practical and principled leaders, often viewed with suspicion by intellectuals, but elected due to their trusted and steady temperaments, qualities that were clearly demonstrated under the immense pressure of combat.
Tested under fire, literally.
The essay then delves into the specific approaches of each of these five leaders. Washington focused on achieving national unity, building a military for defense rather than conquest, and advocating for neutrality in foreign conflicts, particularly the Napoleonic Wars.
Avoiding foreign entanglement.
His farewell address, with its emphasis on national unity, political moderation, fiscal discipline, virtue, education, and foreign policy independence, is highlighted. McKim even quotes Washington's advice on honesty, justice, and minimal foreign meddling, contrasting it with the current administration's policies.
A clear contrast drawn there.
Then there's Andrew Jackson, the hero of the Battle of New Orleans, who presided over a period of economic calm and prosperity, focused on keeping European powers out of the Americas and uniting Americans for economic benefit.
Old Hickory.
He famously worked to curb the power of financial elites by dismantling the Second Bank of the United States and even eliminated the national debt.
Eliminated the debt. Can you imagine?
His quote on American freedom and happiness and the dangers of internal threats is noted. What's a common thread here? A focus on domestic strength and avoiding unnecessary foreign conflicts seems pretty clear.
Yeah, build the nation from within. McKim then discusses Zachary Taylor and Ulysses S. Grant, both of whom viewed the Mexican War as fundamentally immoral.
That's interesting, given they were generals in it.
He shares Taylor's quote about war as a national calamity, and Grant's later assessment that the Mexican War was essentially bad karma that directly led to the Civil War.
Wow, linking those two directly.
Grant's observations on the contrasting leadership styles of Generals Taylor and Scott are also included. Taylor is noted for his generous armistice at Monterrey and his impressive victory at Buena Vista, despite being significantly outnumbered.
Rough and ready Taylor.
Grant, despite earning the nickname Unconditional Surrender, also offered generous terms to the Confederacy at Appomattox, famously declaring his desire for peace with the slogan, "Let us have peace," and prioritizing post-war economic recovery, even vetoing an inflation bill.
Focused on healing the nation.
His administration also avoided excessive entanglement in European affairs while still holding them accountable, as seen in the CSS Alabama dispute settlement. Taylor, despite being a slaveholder himself, also sought to limit the expansion of slavery. What stands out here is a sense of moral conviction and a focus on reconciliation after conflict.
Finally, there's Dwight D. Eisenhower, who was elected on his promise to bring peace, which he achieved by ending the Korean War through quiet diplomacy.
Ike. I like Ike.
His presidency was marked by a period of significant economic expansion and prosperity, including the development of the interstate highway system. He notably avoided military intervention during the Suez Canal crisis and the Hungarian uprising,
Moments of major tension.
prioritizing long-term U.S. interests and stability over immediate action. His farewell address, with its now famous warning about the growing power of the military-industrial complex, is given particular emphasis.
A warning that echoes today. It seems all five of these leaders, despite their military backgrounds, shared a deep understanding of the costs of war and a preference for peace and prosperity.
Moving into part 6, the discussion centers on the idea that historically, as a great power's economic strength begins to wane, there's a tendency to rely more heavily on military force to maintain influence.
The imperial overreach idea.
The essay discusses the historical practice of directly funding wars through the investment of ordinary citizens, like with war bonds in the Civil War, World War I, and World War II,
Everyone chipping in.
and highlights the various benefits of this approach. Gauging public support, boosting national morale, democratizing national debt, and limiting both consumption-driven inflation and dependence on foreign creditors.
Yeah.
What's the core contrast being drawn here? It seems to be between a broad-based investment in war and the more detached financing of modern conflicts.
Yeah, less skin in the game for the average citizen now. Joe Brennan's recollection of André Malraux's 1962 toast to the United States for possessing immense military power without a love for war and having terrible weapons but not wanting to use them provides a poignant snapshot of a time before.
Before Vietnam escalated.
Before, as McKim argues, America's focus potentially shifted more towards military might. This perspective is further explored through Paul Kennedy's influential work, The Rise and Fall of Great Powers. A classic. Kennedy's central argument is that there's a strong historical correlation between a nation's economic strength and its military power, and he warns about the inherent dangers of a great power overspending on security at the expense of its wealth-generating capacity.
Guns versus butter.
Exactly. He notes the historical pattern of declining powers often increasing their military expenditures, which ultimately exacerbates their problems. He famously quoted a saying from Spanish captains: "Victory goes to him who has the last escudo," or coin.
The last dollar, basically.
It's important to remember that Kennedy wrote this before the collapse of the Soviet Union and during a period of unchallenged U.S. economic preeminence with an unbacked reserve currency, which McKim suggests might have created a temptation for military adventurism among political leaders who lacked a true understanding of war's costs.
The unipolar moment temptation.
McKim draws a parallel to the decline of Great Britain, which he attributes in part to excessive defense spending and the rise of competing global powers. He also references Spain's irresponsible use of gold from the New World to finance endless wars,
Squandering the windfall.
citing David Landis's The Wealth and Poverty of Nations, which also offers a warning to America about the potential dangers of easy money and the prioritization of leisure and status over sustained productivity. Landis's quote about the wealthy poisoning the earth and ultimately having the most to lose is particularly thought-provoking.
A cautionary tale about complacency. This suggests a historical pattern of economic overreach leading to decline.
The essay then presents a rather critical list of recent examples of U.S. involvement in international affairs, implying a pattern of what the author perceives as arrogance and a decline in global trust.
What kind of examples?
These examples range from discussions about not ruling out a nuclear first strike and the Nord Stream pipeline incident to the withdrawal from Afghanistan, the destabilization of Libya, objections to TikTok, and the perceived ineffectiveness of sanctions against Russia.
A real grab bag of interventions.
The author then explains the two key benefits of a nation holding the world's reserve currency: the ability to price international transactions in its own currency, and the necessity for other countries to hold reserves of that currency.
The exorbitant privilege.
Right. However, he argues that the U.S. dollar's dominant position is fundamentally based on confidence, which he believes is now eroding.
The historical agreement with Saudi Arabia to price oil exclusively in U.S. dollars is discussed as a cornerstone of the dollar's global status.
The petrodollar system.
But McKim highlights its growing fragility, noting Saudi Arabia's discussions with China to potentially price oil in yuan, the possibility of China selling advanced stealth fighter jets to the Saudis, and generally strained relations between Saudi leaders and the current U.S. administration.
Signs of a shift.
He also mentions a broader trend of other countries increasingly moving to price their bilateral trade in their own currencies, such as the yuan or the Indian rupee. The conclusion drawn is that many large and populous countries are gradually moving away from reliance on the U.S. due to a growing distrust of American foreign policy and elites.
De-dollarization chatter getting louder. What's a tangible sign of this shift?
Well, one significant indicator mentioned is the record pace at which central banks around the world are accumulating gold reserves, as shown in Figure 3.
Central banks buying gold like crazy.
Gold is seen as a neutral, agnostic store of value that isn't subject to the political whims or economic policies of any single nation. This trend suggests a diversification away from dollar-denominated assets.
McKim ends Part 6 with a very direct and challenging question. Can a country that is seemingly engaged in conflict with a significant portion of the world, both externally and perhaps internally, truly expect to maintain its position as the issuer of the world's reserve currency?
A heavy question. He clearly suggests the answer is no. Finally, in Part 7, we move into some investment observations and the author's concluding thoughts.
Bringing it back to the investor.
He quotes Will Durant's observation that civilizations tend to decay gradually, followed by sudden and dramatic bankruptcies, a sentiment echoed by Hemingway. How did you go bankrupt? Two ways: gradually, then suddenly.
Ah, yes, that quote. This is then linked to the recent collapse of Silicon Valley Bank as a modern example of this kind of rapid systemic failure.
Done and crack in the facade. What's the underlying message here for investors?
The advice offered to investors is to seriously consider moving a substantial portion of their capital outside of Western-dominated financial systems.
Diversify geographically.
Seems to be the implication. While simultaneously opposing what's termed woke intrusion into various aspects of society, this perspective references Matthias Desmet's work on mass formation as a potentially self-destructive societal phenomenon and suggests that the current environment exhibits some of these characteristics.
McKim also warns of increased market volatility in the near future and the particular vulnerability of highly leveraged investment positions.
Leverage cuts both ways.
He predicts potential failures of unprofitable technology companies that still have very high price-to-sales ratios, as rising nominal interest rates make their future earnings less attractive in present value terms.
The unprofitable tech reckoning.
He suggests that the cryptocurrency market, which has often mirrored the performance of tech indices, is likely to continue its downward trend when adjusted for inflation.
So not a safe haven in his view.
While maintaining a positive long-term outlook for gold and other precious metals, citing small potential drawdowns as buying opportunities, he also cautions about potential volatility in precious metal mining stocks
Miners can be very volatile.
and an increased risk of asset confiscation in certain jurisdictions. It's a rather cautious and somewhat pessimistic outlook for traditional Western markets.
He expresses concern about the perceived lack of leaders today who possess the same resolve and focus on stability that he attributes to the 5 general presidents he discussed earlier.
A leadership deficit.
His prediction is for continued global discord and volatility. He even raises the possibility of Americans traveling or living overseas facing increased hostility due to a perception, which he suggests might be somewhat justified, that the U.S. is to blame for many of the world's current problems, referencing Grant's quote about nations eventually being punished for their transgressions.
The author concludes by reiterating his central argument that the 5 general presidents he highlighted fundamentally valued stability, peace, and mutual respect among nations, the very opposite of a constant state of war.
A call for a different approach.
It's a powerful and somewhat sobering final thought. So to bring this deep dive to a close, we've journeyed through the cyclical patterns of history, the persistent challenges of effective governance, and the significant economic consequences that ripple outwards from prolonged conflicts,
Both historically and potentially today.
both in the context of the early 20th century and with potential implications for our near future. We've also contrasted these trends with the approaches of past American leaders who, having experienced the realities of war firsthand, seem to prioritize the pursuit of peace and domestic prosperity.
And this all leads to a critical question for you, the listener, to ponder. Considering these historical lessons and the current global trajectory, what might this suggest about the future of global power dynamics and long-term economic stability?
Yeah, something to chew on.
It's a question that invites further reflection on the interconnectedness of the issues we've explored today.
Thank you for joining us on this deep dive. We encourage you to consider the source material we've discussed and perhaps explore these topics further on your own.
We hope this exploration has provided you with a valuable shortcut to being well informed.